Hello, welcome to European Open briefing for Friday, June the 8th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So this morning we do have quite a bit of risk of sentiment. There is uncertainty ahead of the G7 summit starting later today in Canada, and also we are seeing a bit of a panic in bond markets on the expectations that the ECB will end its asset purchase program. It will make that announcement next week, according to market expectations. The dollar is stuck near 3-week lows. The euro has come off its 3-week highs. The Australian dollar is also feeling some downside pressure on the back of that risk aversion, despite the fact that we did get some upbeat Chinese trade numbers this morning, and the Canadian dollar is also lower ahead of the Canadian employment report coming up later today. Let's get started now with the US currency. We can see dollar yen had been having a good week until around about Wednesday when it broke above the 110 level. It has now retreated to around 109.45. If you look at the dollar index in purple, we can see it fell to 3-week low of 93.21 yesterday. It has rebounded somewhat to around 93.55. So the main reason why the dollar is struggling this morning, particularly against the yen, is US Treasury yields are down, mainly on safe haven demand. So we're seeing some concern that tighter monetary policy in the US and now in Europe as well could potentially lead to some sort of sell-off in government bonds, mainly in periphery Eurozone countries and in emerging markets. On the other hand, US Treasuries and German bonds are in strong demand this morning, with the yields being dragged lower. We also have uncertainty ahead of the G7 summit. President Trump has been exchanging angry tweets with the Canadian and French leaders. So the French and Canadian leaders have already met ahead of that 2-day summit in order to achieve some sort of a united front against President Trump. They are angry against President Trump's decision to not to exempt them from the steel and aluminium tariffs. So tensions are quite bad at the moment. We could potentially see the G7 leaders failing to agree to a joint statement for the first time ever when the summit ends on a Saturday. There's also a bit of a concern about the summit between Trump and North Korean leader taking place next Tuesday. We've got another risk event as well next week, the FOMC meeting. US stocks weren't too badly affected, though the Dow Jones closed up, though the S&P and Nasdaq closed lower. But in Asia, stocks were sharply lower this morning, and Europe also opened sharply in the red. And taking a look now at European currencies, we can see the euro peaking at $1.1840 yesterday. So that rally came on the back of expectations that the ECB will announce next Thursday at its policy meeting that it will end its QE program by the end of the year. This morning, though, the euro did come under pressure from worse than expected data out of Germany. We saw industrial output and exports falling by more than expected in April. We're also seeing, of course, lower German bond yields, so that's weighing on the euro. Despite all that, though, the euro is still on track to end the week with 1% gains against the US dollar. The pound is also on track for weekly gains, though yesterday we did see a bit of a wobble when the sterling fell below the 1.34 level. There were concerns that Brexit Secretary David Davis might resign due to disagreements with the Prime Minister Theresa May, but it looks like the Prime Minister did manage to reach some sort of a compromise with her cabinet, and the UK finally published its proposal on a backstop plan for Northern Ireland. So the UK has set out plans where it would try to set up some sort of a borderless customs check on the Northern Ireland Irish Republic border, and in case it doesn't, it will remain within the customs union until the end of 2021 as a backstop plan. But there's the Prime Minister May's cabinet is still strongly split between the Brexiteers and Remainers, so there could potentially be further trouble down the line, and we could see sterling easily slipping below the 1.34 level. Let's now move on to the Australian dollar. The Aussie had been having a pretty good week until Wednesday, when it hit a 6-week high on the back of upbeat GDP numbers for the first quarter out of Australia. On Thursday, though, Australian trade numbers disappointed, and this morning, of course, we have that risk of sentiment, which is pulling the Aussie lower. It's currently fallen below the 0.76 level against the US dollar. It didn't manage to find much support from Chinese trade numbers. We saw Chinese exports surging by 12.6% year-on-year in May. Imports were also up sharply, beating expectations, and in what should have been good news for the Aussie, imports of iron ore by China rose by 13.5% over the month. But the Aussie, of course, is a very risk-sensitive currency, so therefore the risk-off mood isn't doing the Aussie any favors this morning. And the same can be said for the Canadian dollar, which has weakened back to the 1.30 level to the US dollar. There's growing tensions between the Canadian Prime Minister and President Trump. Perhaps there's a growing risk now that US may abandon NAFTA if the two sides don't manage to resolve some of their differences. But the main focus, though, is the Canadian employment report due later today. The Bank of Canada has been a bit more hawkish in recent days, so if the job numbers come in above expectations, that would further raise expectations of a rate hike by the Bank of Canada in July, and we could see Duluni reversing some of its recent losses. And finally, looking at commodities, we can see gold prices have been more or less flat. Early in the week, we had strong risk appetite. Despite that, the gold only fell marginally, and this morning we've got sharp risk of sentiment, and gold is only marginally higher. So the main reason for that is expectations of ongoing increases in US rates is more or less offsetting geopolitical and political risks, which normally increase safe haven demand. The main beneficiaries this morning of the safe haven flows are the yen and the Swiss franc. If you look at oil prices, we did see some volatility, but overall oil prices have steadied in recent weeks. Yesterday, oil prices were boosted by falling production in Venezuela. Venezuela is struggling to maintain output due to its poor infrastructure as it suffers an economic crisis. This morning, though, oil prices came under pressure from the Chinese trade data, which showed Chinese imports fell in May. That's weighing on WTI crude oil prices this morning, which have fallen back below the $66 a barrel level to around 65.66 at the moment. And a quick look at today's economic calendar. We can see we had some revised GDP data out of Japan, which came in below expectations. Growth remained unrevised at minus 0.6% on an annualized basis. We can see the German data there far below expectations, and the Chinese data there as well, which was very positive. The main focus later will be the Canadian employment numbers. That's it from me. Thank you very much for watching, and have a great day.